Before we start our today's lecture, check out our 7-Figure Traders program, a program dedicated for you to become a high-performance trader, only going for $115 per month with trading signals included. Find the link in the description box below and join the winners. Hello and welcome back to Bunnex Investment Group. In this video, we are going to start off on trading BTMM. For the sake of those who do not know what BTMM is, it's basically beat the market maker method, which was actually first invented by Steve Mauro. So we are going to start on the definition of beat the market maker. Then we will talk on how to use the Traders Dynamic Index the right way, which is actually the title that brought you to this particular video. So what does BTMM say? On BTMM, there are a lot of things that you need to take into consideration. One of the factors is actually using the indicators, the BTMM indicators, which I have already removed because for the scope of this video, we are not going to require them. But basically, it states that when we have 3 levels in the upside or 3 levels in the downside, we expect to find a reversal. What is a level? A level is basically a day of rise or a day of drop. And a market maker cycle is actually a cycle that includes 3 days of rise or 3 days of drop. So we will be incorporating the H1 time frame and the Traders Dynamic Index. This on the bottom side is the Traders Dynamic Index, which is basically in short a TDI, and it's actually a combination of the volatility bands, the RSI line, and the moving averages, the one in red and the one in yellow. So if you want this indicator, I'll provide you for free through our free Telegram channel. Be sure to be part of that community. All right, so where do we start when we want to use the Traders Dynamic Index the right way? The first thing is always to count levels and reach what we call the peak formation high or peak formation low. I'll start to count levels from actually this particular point. In this case, we can see there were equal lows that were created. This price is actually a datum. Why am I saying it was a datum? Because it was a point where the market tapped more than once. So after the market taps this, we can actually say it's the peak formation low that has been issued. A day of rise is what we term a level. From that lows, we can see there was a day of rise, all right? A day of rise meaning we had level 1. When we have level 1, we actually come into consolidation or a pullback. After that pullback, we had the second day of rise, which was issued at this particular price point. Then we had the third day of rise, which was this one. After 3 days of rise, what do we have? We have what we term a peak formation high. In this particular case, it was an uptrend. An uptrend is actually removed or is actually terminated by a peak formation high. A peak formation high using the Traders Dynamic Index will actually say we need to see the RSI line, the green line, actually dropping. When we see these crests of the RSI line dropping, it means the relative strength index of the currency in their pairing is actually dropping. So this crest is actually higher than this crest, meaning that there was signs of dropping of the relative strength. So when there is signs of dropping of the relative strength, it means that we have reached the peak formation. What we now need to look for is a candlestick reversal pattern on the second leg of the M pattern structure. This is how you actually need to use the Traders Dynamic Index. When we see the relative strength dropping, it means that we have reached the peak formation. So where were we going to get our entry? Our entry was going to be at this particular point after Asian session at first leg level. So this was the move that we were supposed to make an entry. After 3 levels in the upside, we expect to get what we call a reset point. A reset point in this particular case was issued as a V bottom, which was this one. We start again our count. We said a level is basically a day of rise or a day of drop. This was the first day of rise, then the second day of rise was issued, and then the last day of rise was issued, like that. Meaning we had 3 days of rise in that particular case. What have we said? When we are using the traders index, the traders dynamic index, we need to see crests actually dropping. First crest above the second crest, meaning this was now a peak formation high. On the peak formation high, we actually could enjoy a drop to the reset. We start again the cycle. 3 days in one unilateral direction give us a completed cycle. So this was the first day of rise, and on that first day we had some consolidation, then the second day of rise, which was later engulfed with this particular drop to the downside. So this was the second day of rise, and then we had the third day of rise, like that. So in this particular case, we reached a point of peak formation high. What is happening to our crest on the traders dynamic index? We can see this one is above these crests, meaning that we have confirmed that we are at the peak formation high. So basically you need to wait up until the peak has been set. Peak has been set. After peak has been set, the next thing is now to find the second leg, and on the second leg you need to get a candlestick reversal pattern. So basically this video is actually to give you a glimpse of the BTMM, or the institutional market maker method, whereby we count levels, confirm with the traders dynamic index. But unfortunately in this part we did not talk about the BTMM indicators, like that. On that note, we've come to the end of our today's video. I'll see you in the next one.